Hey everyone, it's your girl, hashtag JLoan, and guess what day it is? That's right, it's Mortgage Tip Tuesday. Another Tuesday, another tip with it's your favorite girl, hashtag who? JLoan. Hey, today's topic, it might be a little long, but I promise you it is worth listening to. Right now, when I got into business in 2006, interest rates were around 8%, 7-8%. Right now, interest rates between a 15 and 30 year, you're talking about your 2 to 3% range of rates, whether that's 2 high or 3 high. I'm just giving you between 2 and 4%. That's where rates are. We're not allowed to disclose actual rates, so that's why I have to give you a range. But I want to talk to you about reasons to refinance. There's a lot of people that are riding the fence right now and maybe thinking, oh, rates are going to get lower. But the flip side of that is rates can also get higher. And I do know one thing that is very, very true is that mortgages or the mortgage market or the housing market, it fluctuates. Every 10 to 15 years, the market kind of rises and falls. That's just how it is. And the last time we kind of had this wave was in the mortgage meltdown, which is your 2007 to 2008 years. And so, yeah, rates could change any day because I feel like we're in that 10 to 15 year wave of when is it going to happen. So I want to talk to you about reasons to refinance now. We can't gamble and wait till tomorrow. I'm not a gambler. I don't like to lose money. And I promise you, I hear it from a ton of clients who ride the fence. As soon as rates rise, they say, I should have refinanced before. So let's go over reasons why you should refinance. One of those is, of course, to lower your interest rate. The next one is to lower your term. Maybe you're on a 30-year loan and you want to pay off your loan sooner and want to look at any other term, 15-year, 10-year, odd years, 17 years, whatever it is, you want to pay off your loan sooner. The next one is you want to cash out. Maybe you have a ton of high interest rate debt and interest rates are so low on your mortgage that you decide, hey, I'm going to use some of the equity to do some debt consolidation and get all of my payments into one low monthly interest payment. Or for any other reasons that you decide to cash out. College for your kids, buying a vehicle for your kids, whatever that reason is, you do not have to tell us. That's your choice. Another reason is to combine your first and your second mortgages. Sometimes when you created your loan, you did a first mortgage and a second mortgage, which typically is a higher interest rate and sometimes even a variable rate. And now with interest rates so low, you can actually combine them together into one low monthly payment. So that's a great reason to refinance. And then sometimes you're in an adjustable rate mortgage and maybe that term is coming up where it's going to start to fluctuate. Or maybe you're 2 years from when it's about to fluctuate, but rates are still really low now. We don't know where they'll be in 2 years. And you want to get into a fixed rate to make sure that your family's secure. Then getting rid of PMI. With housing prices as high as they are right now and where your home value is today, may be enough to get rid of your mortgage insurance. So that may be a reason in itself to look into refinancing in conjunction with getting a lower interest rate. Now, maybe you're in an FHA loan and you have mortgage insurance for the life of the loan. And now's a good time to get out of FHA and get into a conventional loan. That's a reason that you would want to refinance. And then none the other, with the housing market right now where there's not enough available homes on the market, maybe you were looking and you're tired and you're stressed out and you say, you know what? I don't even want to do this. I'm just going to stay in my home. And you've loved that home for so many years, but you just wish it had this or it had that. Now's a great time to look into a renovation loan. This is where you can actually refinance your first mortgage and include some, if not all, of the cost to help you renovate your home to make it your dream home again. You can do that all in a refinance. So I just given you several reasons that you can refinance, but I also want to make sure that you realize everything about refinancing. And one of those things is, I don't want you to assume that just because you qualified 2 years ago, that you automatically qualify today. Guidelines change, loan parameters change, credit score requirements change, assets change. So just because you have a mortgage now, even if with the same lender, does not guarantee you to qualify for the new loan. You still have to pull credit. You still have to provide pay stubs and income documents, bank statements, W-2s, sometimes your tax returns. You still have to fully qualify all over again. Now, we did just come off a pandemic year, and a lot of people are still feeling the pains that came with that pandemic year, which is loss of income, loss of jobs, switching jobs, and maybe dipping into your assets and not having, or maybe having missed a payment or two, and your credit score is not the same. That's going to affect if you qualify and what you qualify for. So, and on mortgages, if you've missed a mortgage payment, it's very important for you to understand it's hard for you, if you have any mortgage lates in the past 12 months, to really qualify for a new mortgage. So you want to make sure you speak with your great loan officer. You want to make sure that you speak with them, be very open with them, and tell them everything that's going on. And we can kind of vet that to see if we even need to pull credit. Another thing that's very huge is last year, due to the pandemic, there were a ton of borrowers who took advantage of the forbearance plan that allowed you to miss your mortgage payments for a certain amount of time. And it's very important for you to understand you cannot refinance if you are currently in a forbearance at all. You have to take yourself out of a forbearance. You have to make sure that you've made 3 on-time monthly payments. They cannot be in bulk. 3 on-time monthly payments before you can actually refinance. I have had one situation in which they didn't add those mortgage payments to the end of the mortgage. They actually created a whole second mortgage for every payment that the borrower missed. So understand your forbearance so that you can be very open and honest with me or your loan officer of choice, so that we understand the best plan of action. Okay. Another thing about refinancing is, no, you don't have to go back to your original term. Just because you were in a 30 doesn't mean you have to go back to a 30. In fact, we do any term. If you want a 17-year loan, we can look at a 17-year loan. But with interest rates so low, there are times that you can take a borrower on a 30-year, put them in a 15-year, and still have the exact same payment. So if you're comfortable with your mortgage payment, you may want to look into that. Know your goals. Know what you want. You want to save money. You want to save interest. You want to pay off your loan sooner. What are your true goals? Because that would be the question I'm going to ask you right away when you tell me you want to refinance. Now, you hear it a lot, and there are a ton of lenders that do such bad press and advertising. It really crawls my skin when I hear them say you can refinance for no money, or that it's free. Please beware of that. There is no bank that does any refinance loan with no cost. There's always cost associated with refinancing your home. Now, what happens is what they actually do. Are they increasing your interest rate to cover those costs? Are they rolling those costs into your loan? How are those costs actually paid for? Because there is no true, you have no fees to do that. So if they're rolling it into your loan, now you owe more. So you want to make sure of how they're doing it. Be very conscious to stop just looking at interest rate, clients. Please stop looking at just interest rate, because I know a very, very, I hate to say famous, but a very, very good marketing company that does mortgages. We all see them all the time on commercials, who will give you the interest rate you say you want. But if you don't know how to read your disclosures, they are charging you discount points to get that rate. So please understand, stop just shopping rate. Shop rate and fees, because where are they going to put the extra cost? If that interest rate to get you down to 3% or 2% is costing you $5,000 and you're not paying for it, now you're financing in not only the cost of the discount or your buy down, you're financing also your closing costs. Now, you can pay your closing costs out of pocket. Not many people do it, but you do have that right. So understand, you do not always have to finance in your closing costs. Now, if you escrow, meaning you include your taxes and your insurance inside of your monthly payment, you need to understand that escrows are not transferable from one transaction to the next or one lender to the next. So you have not only your closing costs, but you'll have your escrow set up as well. Now, keep in mind, if you choose to pay it, your lender will tell you what your escrow balance is. You pay it out of pocket. Within 30, 45 days, your current lender should reimburse you whatever's in your escrow account. So just make sure you know what's in your escrow account. Do you want to finance it in? If not, you can finance it in. They'll send you a check and you can go on vacation. Whatever makes you happy, you can do that. Now, a lot of people ask me, well, how do I know if refinancing is beneficial? Well, obviously, saving money is great and lowering your interest rate is great. But it's what is your break-even point? So to make numbers very, very easy, if currently you pay $2,000 a month, and by refinancing, you're going to save, your payment's going to go down to $1,500 a month, which is going to save you $500 a month. Now, let's just say the cost to actually close your loan is $5,000. Well, if it's $5,000 divided by the amount of money you'll save per month, which in this case is $500, that's 10 months. It will take you 10 months for you to break even. And then after the 10 months, you're going to start to save your $500 a month. Now, if you plan on selling the home in a year, does a refinance really make sense for you to increase it? Because you're really not going to save the money. But if you're going to stay in your home for 5 or 6 years or 10 years, and it's only really taking you 10 months, you're going to save $500 or $6,000 a year for the rest of the time that you have that home before you decide that you're going to move, sell, or upgrade. Okay. So that's just one way, but really look at what that break-even point is. So if you're saving $200 and it's going to take you 8 years to recoup the cost, are you even going to stay in that home for 8 years? Because if not, then maybe refinancing isn't beneficial for you to do. So anyways, I know this is a ton of information, but I believe this is great information. I do think that you need to look at your mortgage. Your friends need to look at their mortgage. Your coworkers need to really look at your mortgage. If you have an interest rate over 4%, if you're looking to do upgrades, if you have a ton of debt because of the pandemic, and you have equity in your home, you want to do renovations, whatever those reasons are, this video, you please, I need you to not only like it, make a comment, share it on your timeline, let your friends and your family see this, even if they don't use me. My whole purpose of doing my videos is I want to educate the public to know what they can do, to educate you on how this process goes, and to help you with your financial freedom. So even if not me, please choose someone to help you with your refinance, taking a look at your financing, and really telling you honestly if this is in actuality a good thing for you to do. If you don't have someone that you trust that will not just do your refinance just to do it, but will honestly say, hey, this really isn't worth it, or guess, let me show you that this is worth it, please have them reach out to me. Your girl, #JLoan, always coming at you on a Tuesday with some tips. Until next week, I want you to stay safe. I want you to be blessed and have a great rest of your week. Talk to you soon. Bye-bye.